Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news global inflation is coming down as energy cost pressures recede. And so far, it hasn't been at the expense of global economic expansion. But first today, US headline jobless claims rose, but the increase was minor and less than expected. A week from tomorrow, their November non-farm payrolls report is released, and markets currently expect an expansion of 175,000, modest but still expanding. In October, income and spending data growth in the US was modest too, each rising at just on 0.2% from September. That is the lowest for both in 7 months of much better gains. Perhaps of more interest is that their PCE inflation eased again, now down to 3%. 3.5% on a core basis, and closer to the US Fed's 2% target range. But even if it is moving in the right direction, there is still some way to go yet. And the slowing the Fed wants to quash inflation is well underway, according to the November Beige Book surveys. Economic activity slowed since the previous report, with 4 districts reporting modest growth, 2 indicating conditions were flat to slightly down, and 6 noting slight declines in activity. They're managing to slow things without falling into recession. It's actually an impressive performance there. It is tougher in Canada, however. They reported a third quarter GDP decline of 1.1% from a year ago, a sharper shift from the 1.4% expansion in the second quarter. Analysts expected a small 0.2% expansion in the third quarter, so this is a big miss. India also released its third quarter GDP results overnight, and these came in better than expected. The Indian economy expanded 7.6% year on year in the period, following a strong 7.8% growth in the previous period and beating forecasts of a 6.8% rise. The reading is also higher than the Reserve Bank of India's projection of 6.5%. China's official November PMIs brought some more minor slippage and at a faster pace. The factory sector's contracted slightly faster, although it is still minor, and it was expected to contract less. And their services sector expansion, already minor, eased towards a steady state. It is hard to see how Beijing will be happy with these trends. Their top-level charm offensive of recent weeks isn't working yet in terms of getting business people to change their actions and reactions. And container freight rates were unchanged last week, but bulk cargo rates leapt in a surge we haven't seen since 2022 and to this highest level since May 2022. The US Treasury 10-year yield has risen 6 basis points from yesterday, now at just under 4.34%. And the price of gold will start today at $2,040 an ounce. That's down $2 from yesterday. And oil prices have fallen $1.50 since yesterday to just under $76 a barrel in the US, while the international Brent price is now just under $81 a barrel. Markets were unimpressed by the latest OPEC non-decisions. And the Kiwi dollar starts today at 61.7 US cents, unchanged from yesterday. Against the Aussie, we're marginally firm at 93.2 Australian cents. Against the euro, we're back up 20 basis points to 56.5 euro cents. That all means our trade weight index starts today at just under 70.5 and up 10 basis points from this time yesterday. Get more news about the New Zealand economy from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again